Hi, Stacy. Welcome. Keller is here, and Kanaparan, and Joaquin, Parthiban, Ray, Ria, hey Ria, Roger, Stuart, and Waiwita, TLM affiliates. Welcome. Nice name. Yoram is here as well, Gabriel, Boyke, of course, and Carlos. Good to see you, Carlos. Excellent. Thanks for spending time here, guys. My name is Walter Peters, and what we normally do here at the FX Street webinars is when you come to these webinars, when I'm involved, we're normally talking about naked trading. And naked Forex trading is trading without indicators. For those of you that are not familiar with this idea, let me just do, and apologies to those of you that have been to all of the webinars over the last 3 years or so. But what I want to do is I want to draw in my naked sweet spots on the chart because it's going to help with the live setups that we're talking about tonight. So let's get started with that. Now what I want to do is go to a line chart. I'm actually going to use a black and white template here, and I'm going to set up the Euro chart on the 4-hour chart. So you'll notice I've actually got the Euro daily chart on here, but I'm trading the 4-hour chart, and this is what I do. I'll draw in these dashed lines, these zones of support and resistance, which I'm sure many of you are familiar with this idea of support and resistance. But what the line chart helps us do is it helps us see these areas much more clearly. So if you ever have troubles drawing in support and resistance levels on your chart, what I have found to be helpful, and what many of other traders have found to be helpful, is to use these line charts. They're connecting the closing prices of the market, and you see what I'm doing here is I'm matching up where the market's bent on these lines. So the market bent there and went lower. It bent there and it went higher. It bent there and it went higher. It bent there and went higher. So that was double bottom. It broke through, came back up, touched it, and went lower slightly, and then broke back up. But that still counts as a touch. We have 3 or 4 touches here. We have a brilliant one right here. So that's the kind of spot that I'm looking for on the chart when I go to the line chart. You can see I have another one right here. Why do I have one right here at 32.88 on the Euro? Well, because the Euro, it hit here and it fell. It hit there and it fell. It came back up and bounced up there and went higher a little bit. Then it broke back through. But that still counts as a bounce right there. Then we get one there, and we get one there right there. Now you might look at this and say, well, look at that space between the zone, the support and resistance zone, and the market. Well, actually, if you go to the candle, I bet you're going to see that the wicks brush up against that level. A lot easier to see when we're looking at the line chart than it is when you get the candles in there, because the candles are distracting because they give you more information. Line chart just gives you the closing price, whereas the candles give you the open, the high, the low, and the close. So it's a lot more information to take in, and you basically have to decide, am I going to connect the wicks or the closing prices? I like the closing prices. I've come to learn that if I had to choose one, I would choose the closing prices. And so that's what I'm doing right now. I'm choosing the closing prices, and this one's actually a brilliant one here at 39.30 because you have a touch there, one there, one there, one there, one there, and even one. That's probably even one right there. Let me see. No, it's not. One right there. So now, okay, so now I've got all my daily support and resistance levels drawn. I actually probably missed one right here, where I've got a touch, support, resistance, double top resistance, and support, and then resistance. So now what I'm going to do is, and there's probably also going to be one in here. Looks like there's one right about here. Yep. Everybody see that one at 29.45? So now what I do is I go to the 4-hour, and I just make sure that I didn't miss any, because that that can happen, right? So what I'm going to do here is go, okay, where is it that I have more support and resistance levels that I missed out on? Because that's going to happen when I'm trading the 4-hour charts. I'll move to my higher time frame to get the zones in there, and then I'll just make sure that the ones that I missed are also there. I like the dashed lines, Boyke, because it reminds me that the market doesn't have to turn around there. it can break through. That's the only reason why. That's it. That's the only reason why. The only reason I use the dashed lines is to remind me that the market doesn't have to turn around there. It can still break through. It could be a breakout type trade. Now what you'll notice here on the euro is that on this 4-hour chart here, how spaced are my lines, are my zones? Well, they're about 100 pips apart. You know, sometimes they're 70, sometimes they're 60, but they're on average they're about 100 pips apart. You can see this one right here is at 31.88. That one right there is at 32.88. So sometimes they'll compress and they'll go a little bit closer. Like this one right here, it looks like it's about 70 pips between this one and this one. But that's the basic idea. Is on the 4-hour chart, they're going to be about 80 to 100 pips apart on average. It's not perfect, but that's about what I'm looking for. Now on the daily, they're probably going to be closer to 150 pips. On the weekly, they're probably going to be closer to 300 pips. So it just depends on the time frame. If I were trading the 1 hour, I probably would see them every 30 to 50 pips. So it really depends on what time frame chart I'm looking at. Okay, so that's the basic idea behind naked Forex trading, is we need to know where has the market reversed. Why? Because it could reverse there in the past. You can see here that we actually have the market, the euro, is actually on a zone right now. Now, it's not enough for the market to get one of these levels because I know it may break away from this level. In other words, it could go higher, it could go lower. I just know it's at a spot where we could take a trade. Now, to me, it's absolutely critical that I wait for a simple price action pattern, a repeatable pattern, to print at this level in order for me to take a trade. In other words, the market, even though the market's right on a zone right now, a support and resistance zone, it doesn't mean that it's going to fall, in reverse here, and it doesn't mean it's going to break out and go all the way to this level either. I don't know. I don't know what it's going to do. I don't know if it's going to go higher. I don't know if it's going to go lower. So that's why I wait for a price action pattern. Now, just looking at this, if I had to guess, it looks bullish to me. There isn't much about this at the moment that tells me it's going to go down. Now, that could totally change with this current 4-hour candle. This 4-hour candle could completely turn into a giant long-tailed kangaroo tail and give me a reason to sell. But at the moment, this is the type of thing that looks like, to me, a trend continuation. It looks like it's going to bust up and go higher. So, that's that. If there aren't any questions about drawing support and resistance levels, we can get straight into the charts. Does anybody have a chart that you would like to look at? I know what I want to look at tonight, but or today, depending on where you are, of course. Cable, yens, euro. Okay, cool. Brilliant, brilliant, brilliant. Okay, we've got plenty here, guys. I'll tell you the one I want to look at. I want to look at the euro CAD, but we'll get to that one later. Let's go through yours first. Okay, Gregorian says, let's take a look at the euro yen. All right. Here's my euro yen chart, and I'll just tell you right now off the top. A lot of the yen pairs to me are not that exciting at the moment, and the reason I say that is because they're in consolidation mode, and so it's not, to me, it's not at that stage where this is a 4-hour chart, so I really shouldn't go to the daily because the zones are going to look silly. But at this stage, I don't really know what's going on here. In other words, we could just say, you know what? We are stuck in a range on the euro pairs. Sorry, on the yen pairs. Sorry, my mistake. On the yen pairs. We're stuck in this box area here, something like this, or maybe you go a little bit longer, and you go, we're stuck in here like this box. We need to see it get out of this box, basically. We've had a few false breakouts. We had a false breakout here, a false breakout here, but that was when the box was being established anyway. The first real moves would have been these here and this one. So it looks like it's moving back up to the other side of the box, but we don't really know. So on the euro yen, unfortunately, I don't have anything on the euro yen. I've got nothing. My tendency would be to sell this one just because it's gone up so much. Let me go to the daily charts just so that we can see our euro yen chart on the daily. I think It's just really hard to say, guys. I don't know. It's just really hard to say. I would say that there's my email if you guys want any books on naked Forex or whatever. I can send them to you. Yeah, I just don't know. See, this is what's happening. If you look at it, you've got this going on right here. And this pattern can go either way. Normally, it goes up, right? This is one of those pennant patterns that you see in a lot of charts. And often, like on a 1 hour chart, they happen all the time. This kind of thing, it usually goes in the direction of the move up. Now, that's not always the case. I remember, I think it was years ago, on the CAD Yen weekly, this might have been like in 2006 or something, we had the CAD Yen running up, and it did something, it might have been the daily. Anyway, the CAD Yen didn't do it, it fell. It had sort of this bullish pattern, maybe it was the daily, and it didn't follow through like it normally will go in the direction that it's been going recently, normally. That's not always the case. You don't always see that. See if I can find it. I can't seem to. I can't remember. I thought it was 2006, and I thought it was on the weekly too, but maybe not. But the idea here, though, on the Euro Yen is that we don't know. We just don't know. So it's one of those things where I'm not interested in taking a trade. There are plenty of other markets. So let's take a look at the cable. Nyasha wants to see the cable. Let's see. Here's our cable. Wow. And yeah, okay. So no go on the cable right now, but this is what I say about the cable. I would love to take a short right here. Does everyone see why I want to take a short around 56.80? Now that could be 56.65, it could be 56.90, but somewhere in this area here, because they're like beer bellies, right? These reversal zones, these support and resistance zones, are like beer bellies. Sometimes you push it with the finger, and your finger goes in the belly, and then it comes back out. Sometimes you brush up against the hair on the beer belly, and then you pull your hand away really quickly. So we don't know what the market's going to do, if it's going to brush up against it and then pull away really quickly, or if it's going to stab into it before it pulls back a bit. It could actually break through it as well, but I have a bias on this pair for a sell around 56.80. Now the other thing is, you actually have this trend line here where the market was following it. It finally broke through here and bounced to the upside, came back down, broke through it, and touched it from the downside again, and now we're there again. So if today ended up being a really red candle, it's worth thinking about taking a short below today's low. So does everyone understand what I mean by a red candle? If today ends up being a big red candle like this one right here, and then tomorrow it trades lower than the low of today, then that might be worth it to take a short. But I would suspect that it's probably going to go a little higher. If I had to guess, and I'm not going to guess, I'm only going to trade it if it gives me a good solid signal on a zone, I would say it's going to go higher. But I just don't know that. We'll see how today closes. Pan wants to see, Mr. On Fire wants to see the old yens. We can look at another yen, but here's another yen right here. A lot of what's going on here is what's going on the euro yen, Pan. So, you know, a lot of consolidation happening here. I want to go back to my 4-hour charts just because I love the 4-hour better. And those charts are cleaner at the moment. So excuse me while I move back here. Yeah, see, we've got this really well-established area where the market just can't get out of it. It's basically stuck in this area here. So it needs to decide, is it going to go lower? If it goes lower and it comes back up and then kisses this 97.40 area with a bearish candle, I'll take a short. If it goes higher and then comes back down and pushes off 99.80, I'll take a buy off that. But at the moment, they're very, very undecided, unfortunately, Pan. Jeffrey wants to see the euro pound. I think that's a brilliant idea. Euro pound is interesting because it is sort of consolidating if you look at it on the daily and you say, well, we're stuck, right? We're stuck between here and here. And we've just recently bounced off our lower end of the box, and we're headed back up to the middle of the box where we're going to find a little bit of resistance here because of all these touches. And that's around 85. So we're still about 30 pips away from that. But the fact that it did this really bearish candle here, it suggests to me that we're probably going to see some downside pressure. If I had to guess on this one, and again, I don't like to guess, but I wouldn't have a problem taking a short if we get a giant red candle on the daily. So ideally what would happen is today you would see the market push up to 85 and higher, come back down and close with a nice long tail here, and then we could sell it off of that if it goes lower than today's low, all the way down here to 84.05 or so. That would be ideal, but here's what's going on here. Yes, it's consolidating, but the fact that we got this giant big red candle here, it suggests that there's some really strong sellers, and I think it's going to break. I think it's going to break to the downside, and the clue for me will be what it does when it gets to 85. If it gets to 85 and it prints a red candle like this one, I would have no problem sticking a little sell order below that candle. So that's a pretty nice looking chart. And again, now if it clears this high and it trades higher than 85.33, then all bets are off, right? Because then it would have retraced this entire candle. But if you look at this candle, if you look at this candle and the next one, and you go, okay, well, where are we at? See, we're at 61.8. We could get to 78.6, and that would be a nice little area for a sell. So I'm very interested to see if we get a red candle on the daily on the euro pound, because that would be enough for me to think about selling, especially that we're so near to 85, which if you look on the 4 hour is just a brilliant area to trade. Look at all these touches. Boom, boom, bam, boom, 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 wham, wham. So we're headed back up there. I wouldn't be surprised if it got back up to 85, and then I would love to see a bearish candle. Let's keep an eye on that one. I'm glad that who said that? Jeffrey, I'm glad that you said that. Edward, I think we looked at the cable, didn't we? Yeah, we already looked at the cable. So really the cable around this 56.90 area is where I want to be on that one. You can see we had yeah, I'd love to see that fizzle up there. That would be great. Gregorian, did we look at yours? We looked at the EJ, yeah. Yeah, Euro Pound looks interesting, Jeff. Very, very true. How do you draw the lines of a pivots? No, there's support and resistance. Mohammed, go back, if you missed the beginning, I think you might have, go back and look at the beginning of this webinar when they post it, and you'll see how we draw them. It's just support and resistance levels. What about fundamentals? Tomorrow ECB. Banks are shorting big time. Yeah, I think here's the thing, guys. This is look, I'm not a big fundamental guy because I've seen enough news reports come out where you go, oh, that's bad for the US dollar, and then the US dollar just takes off. Or a news report comes out in Australia where I live and it's like, oh, well, that's bad for the Aussie dollar, and the Aussie dollar just takes off. So I don't really try and do a lot of interpreting of the news. I am aware of when interest rate announcements and non-farm payroll, those things come up, because those are important. But what you see right now in the charts, and you don't have to know this, that there's an ECB tomorrow. You don't have to know this, right? Because let's just take a look at, well, I don't want to get away from the chart. Well, let's look at what's happening on this chart right here. What does this candle tell you right here? What does this say? What is it? The market for the last, we won't count the current candle, but 4 hours, 8 hours, 12 hours, 16 hours. For 16 hours, the market's been going nowhere, And when you see long wicked candles like this one where it went up and it went down and it didn't go anywhere in the end, that's indecision. That's waiting. That's let's see what happens. That's what that means when you see that in the candles. Those candles are indecisive. That's what it's saying. Saying we don't know what to do. We've been going up, but we're waiting. So you will see that come out in the charts. You will see the market waiting in the charts. That will be obvious. So the banks are shorting big time. Okay. Nice figures in the UK. Yep, you got it. Nice and go. We could also look at the pound yen. Yep. Look, I'm actually the pound yen gave me a nice, a really nice bearish candle here, and so I'm looking at this as sort of a double top and a sell. But I need to watch today's candle and see what happens. If it gets really bullish today, then I'm gonna probably dump this trade. But at the moment, I'm looking for this pair to go down. That's the only yen pair that I'm trading at the moment, and I don't know, and I'm not sure that it's the right thing. I want to see what happens today, because really what we need tomorrow is a bearish candle. Look, the yen pairs have had a nice run, and they need to even if they go up another 1,000 pips over the next month, they still need to come down, and they will. So I'm happy to sell these suckers, because what will normally happen in uptrends is you get really nice uptrends, and then when the trend is over, it completely collapses and it goes much faster. So, for example, let's take a look at the yen. If you look at the yen and you go, okay, well the yen's been on a tear. That's right. But here's what you will notice. For example, it took X number of days to go. It took 27 days for the yen to go 770 pips. 28 days for it to go 770 pips, right? Now, let's see how long it takes it to go down 700 pips when it collapses. You will see it'll be a lot faster. That's what's kind of fun about trading the end of the trend. That's what's nice about that. Okay, so let's keep going here. Who else? Yeah, the Swissy, we actually took the trade on the Swissy already, and that one hit target 1, and then it got stopped out at break even. Let's see if I can find it. Actually, I know where it is. It's right here. I just want the right chart so you can see it. But I want to talk about the Euro CAD, because that's my favorite setup tonight. Where is the Swissy? Here it is. Okay. This is how this trade went, guys. I'll show you how it was managed, just so you get an idea of how I trade. All right. This was... And those of you that follow my trades know all about this trade, and I'm sorry to bore you, but for those of you that haven't seen this, it's kind of good to watch it because it gives you an idea of how I manage my trades and if this is a style that you might like. Here's what we had here. We had a bullish engulfing, or what I call a bullish big shadow, which is a special case of the engulfing candle that many of you are familiar with if you're into price action trading. And what we have here is a buy signal. So I put my buy stop above the high here. And what happens? The market messes around, but that's still enough for me, even though it didn't go anywhere. I like to see it trigger the next day or the next candle. It didn't trigger, but I still said, look, the market's snapping back up and closing up high and tight here, so I'm going to hold on and see what happens. It triggered it on this candle right here. It was a buy at 93.32. That's where I took my trade, at 93.32. And I had two targets. The first target was up here at 9,400. The second target was at 9,500. Why 95? Because that's where we had this level up here. Now it actually went to 94.97.6. So it missed my target by 2.4 pips. And then it came down. I thought it might hold here where this, see where these lows are and where this shaded box is? I thought it would probably hold there after this wick printed, but it didn't. It came back down. And it stopped me out at break even because once I hit target 1 at 9,400, I always move my stop loss to break even and wait for target 2. So actually target 2 was never achieved. So that's an example of the type of trades that I take on the daily chart. Now what I want you to notice here is, one, that after the daily candle printed, it took 3 days before the trade was triggered. That's not normally the case. Normally, I will wait the next day and it'll trigger the next day. But because these candles closed right on the high, I was willing to wait it out and see if it would trigger, and it did. That's a little bit unusual for me. I actually usually just go with the first day or the first candle. So when trading the 4-hour charts, it should normally trigger on the next 4-hour candle. So now let's look what happened. So it went and it basically closed, right where it triggered. It got in at 93.32 and it closed at 93.39. So it's basically break even plus 7 pips. It goes up and rockets up the next day, and you can see here it went to 94.55. So it actually took out my target, and then I swiftly moved my stop loss up here to break even, from down here to break even, and then I let it ride. And of course we never, even though the next day it went up, it never really hit that target. You'll notice that my zone is at 94.13, which is why my target was 95. It was actually 13 pips lower than the zone, because I know sometimes it'll do exactly what it did, which is it'll get up there, brush up against the hair on the beer belly, and then fall. It's exactly what happened here, is it rocketed up, brushed up against the beer belly, and then it fell. So there you go. But that's fine. I mean, that's the it's okay for me that it didn't hit my target. It's all right, because enough of them do hit the target. And sometimes I'll have a third target, and when it hits that one, that's really nice as well. So that's basically how I trade. Did we have any other? Yeah, let's look at the Euro CAD. When price is ranging, you usually have a lot of buyers and a lot of sellers. So there you go. Gabriel, which chart do you want to look at on the 29th of April? Swiss. There's no, I don't see any pin bar or kangaroo tail or whatever. 29th of April. There's nothing going on there, buddy. I got nothing here. This is a giant red candle. Oh, on 1 hour. On 1 hour, okay. So you're one of those guys that doesn't like to get any sleep. Okay, I like to trade the 4-hour or weekly or daily charts. Okay, so let's take a look at this one. I'm not sure if I had a zone drawn here. Here's what I would say about this chart. I would say that it looks like the major support area was down here at 93.37. See all these touches here? To me, that's the real critical level. Support, resistance, 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 support, support. And then what we see here is this one it wasn't really there. You know what I mean? This candle, let's see. So does everyone see what Gabriel's talking about? He's talking about this candle right here. This would just be a straight loser. It's a straight loser. And I'll tell you why I don't like it. There's 2 reasons why. Number one, the closest area of support and resistance is going to be in this area right here. Let me get rid of this one. Hold on. Get rid of this one for you. Rectangle. There we go. The closest area of support is this area right here. And you can see that the candle is actually on the other side of that. This is what I call, and there's actually one recently, I think it was on, I don't know if, I can't remember the pair, but we'll find it in a minute. Because people were asking me about this chart, and I said, I hate it. I don't like it at all. Was it the Pound Aussie or something? Basically, this kangaroo tail should have, if we could pick it up and move it down here, it would have been brilliant. It has a nice long tail. The open and the close are inside the previous candle's range. The next candle traded higher. Everything about it is great, except for it's in the wrong spot. And what you will notice, even if it was up here, in this area it would have been better. Even if you could just lift it up and put it right here on this support area right here. If it printed right there, that would have been brilliant. But the problem is, the closest area of support and resistance is immediately above it. In other words, the market has already broken through that level. And what you really have going on here, and I know this is going to be really difficult to see for some people, But after time, you'll see this. What you really have going on here is a touch and go. In other words, we had support here on the way up. The market comes back down, finds a little bit of support, breaks through, comes back up, touches it here, and then falls. That's really what was going on here. And let's see what the 4-hour tells us. Yeah, it doesn't really... what you get here on the 4 hours is an inside candle, or actually a couple, which is normally a trend continuation, and that's exactly what you had here. And actually you have some more going on here. So it looks like it's going to fall. Yeah, I don't think that kind of setup to me is not my favorite, Gabriel, not my favorite. The candle itself is absolutely A-grade brilliant, but the placement is so critical, and if we just willy-nilly take every kangaroo tail we see, we won't find good setups. So hopefully that makes sense. Yeah, and the other thing is, Gabriel, if you're trading 1-hour charts, see if you can just trade those 1-hour setups on the daily chart zones. In other words, draw your support and resistance levels with the line chart, like we talked about, and then just wait for the market to get to those daily support and resistance levels if you're going to trade the 1 hour. The thing about 1-hour chart trading or 15-minute chart trading is you really need so strong support and resistance levels. I have found that if you don't do that, your win rate plummets. Like, for example, I and a lot of my friends know that, if you're trading bullish big shadows, bearish big shadows on the daily chart, you can easily pull 79% win rate. But as soon as you go down to the 1-hour chart, it plummets. And the reason why is because we have to be careful about where we're taking those. And as you know, the support and resistance levels are broken through quite easily on the lower time frames. It happens every day. But if we wait for a really strong one on the daily, for example, then I think it'll increase the odds. So test that one. See how that works for you. Okay. Yeah, the accuracy goes way up, exactly. Okay, Euro CAD. Let's talk about the trade that I really like. This is kind of, whoa, what happened to my 4-hour? We'll go to the 4-hour right here. Okay. It's kind of my pet. Oh, I also wanted to talk about the kangaroo tail that died. I had some questions. Well, I'll find that in a minute. Let's talk about the EuroCAD. Okay, EuroCAD, ooh, it's starting to do its thing. Great. EuroCAD is in this sort of downward channel. Now, first thing I want to point out is that the market's been moving up and touching this channel and falling, right? There's a couple of wicks there. There's a couple of wicks there. Or, sorry, one wick there. There's another one right here. There's another one right here. And so now we're coming back up. The other thing I want to point out is that we're actually on a very nice support or resistance level right here. Okay? Market reversed after bouncing here. It broke through. But what happened when it broke through here? It went up, it hit the next level, came back down, and touched it again right there. What was resistance became support. And then it broke through again. What did it do immediately? It touched it again. What was support became resistance. And now we're up there again. This right here, this intersection of this downward trend line in the channel and the horizontal support and resistance is an absolutely brilliant spot for a trade. I love it when this kind of setup shows up on my charts. I absolutely love it. So this area right here, hold on guys, I know you can't see. Okay, right there. See this green thing? That's where I want to take a trade. What would make me take a trade if the EuroCAD went up into this area? What would make me think, okay, it's another time to sell? Because it might not. It might break through here. I'll tell you, if the EuroCAD on this 4-hour candle that we're on right now, if the wick of that candle, see right now the high is at 32.88. If that high goes up to 32.95 or higher, okay? If it goes to 32.95 or higher, and it closes as a red candle, which we are only an hour and a half into this candle, so it's got another 2.5 hours to go. If this candle closes as a red candle, a downward candle, and that wick penetrates into this area, I would be interested in taking a sell trade below the low of that candle, whatever that low is. So, for example, let's say that the EuroCAD, the wick, the high of the candle, goes up to 32.99, okay, which would be right about here, okay. So that wick would go right there, all right. So and let's say it's like a 40 pip candle, all right, a 42 pip candle, and then it closes down here inside of the range of this blue candle. Let me zoom in so you can see better. So, like this. See, if that wick comes up here and hits 32.99, and then, if it goes to 32.95 or higher, that's fine. And then it comes down here and ends up being a really nice red candle, I would put my sell order 3 pips below that low. So let's say the low on this candle ends up being 32.50, and the high is 32.99. Okay, so that's 49 pip candle. Okay, 32.50. I put my sell order at 32.47, and where do I target? I target the other side of the channel, which obviously is going to be right here, this area right there, which is going to, and the stop loss goes above the high of the candle. Okay, so roughly that's going to be 50 pips of risk, and we'll be looking for about 60 pips of reward on that trade right there. The longer it takes to get there, the more reward, because if it takes all the way down here, that's 80 pips, right? So, but roughly it's about that. Now, the other thing that's nice about this is that we're below this. Well, on the 4 hour you'll see it better, but we're below this really strong support and resistance level. If you go back on the charts, look at all this support, resistance, resistance. It's a brilliant spot on the chart. So I want to be on the other side of that. I want to be on a trade that I can hang my hat on and say, you know what, the market's probably not going to break through here. So this, to me, is a brilliant setup. Now, where would I go for my second or third targets on this one? Well, there's some really critical areas on the chart. One brilliant one is down here around 30.85. To me, that would be an excellent spot to take profit, around 30.85, right? You'll notice that this level right here sort of coincides with, it's close to the recent touch here, right? So I wouldn't be surprised if the market did give me my signal candle here. I wouldn't be surprised if it came down here and got hung up for a little bit, right? It might get stuck there for a few candles before it finally comes back down. But this is the type of setup that I like, because we've got downward pressure on the trend line. We've got historical reversals here, and if you don't believe me, take a look. I'll make this blue so it stands out, this level here, and if we go back, look at all of the time that the market touched this level and turned around. Look at this one. It broke through and then it bounced off of it on the way up. So that's what I like to hang my hat on. I like to hang my hat on those levels on the chart where it repeatedly reverses. It stopped here on a dime before it broke through. It stopped here and then it finally broke through. Here it broke up, but if you look, it looks a little sloppy here, but look at the line chart. Look at that. Sure, maybe we move it up, 2 pips or whatever for, to capture this. But that's basically brilliant reversal, reversal, support, support. So really nice setup. Really nice setup, guys. This is the kind of trade I take. This is the kind of one right here that I like. There's a debate going on about the banks here. I love it. That's great. So, so we've got in the background, for those of you that are watching the recording, in the background we've got a couple of traders debating what the banks do. Right. So for all of you traders out there, for all of you traders out there who are trading the interbank market, this is definitely for you. Okay. And for the rest of you that trade with retail brokers, it's a different thing. Bank traders sometimes they just like put a moving average on the chart, or my brother-in-law is a bank. He's a bank trader, but it's just funny. I love. You know, it's like you know what talking about bank traders reminds me of like UFOs or Bigfoot. Everybody's got their own pet theories, and it's brilliant because you know anything goes. It's like, oh, well, you know, Bigfoot's like this, or no, UFOs are like that, or whatever. And everyone's got their own idea. Oh no, that's just a bunch of silly nonsense or whatever. It's like it's a perfect tabula rasa where you can just whatever you throw up there. It's like a Rorschach, right? You know the ink blots. You can see whatever you want to see. That's what's so great about it. I love it. Okay. So anyway, so that's the trade that I like tonight, guys. Now there was another really nice looking kangaroo tail that a lot of people were talking about. Let's see if I can find it here. And it's a brilliant example of a busted kangaroo tail. Let's see if I can. Maybe it was the Aussie Kiwi. Was it the Aussie Kiwi? Yes, it was. Here it is. Okay. This reminds me of the 1 hour chart that we were looking at earlier. Who was asking about the 1 hour Swissy? Gabriel. Brilliant. Hey, Gabriel, this is what I want to show you because it reminded me of your trade that you were talking about. And this isn't anything other than, I'm not trying to pick on anyone or anything, but this is the kind of thing that we had one on the pound too last year, I think, on the daily chart on the pound. Here's the thing. The market gave us support here, and then it gave us support here, right? Okay? So this was support, and this is 2169 on the 1.2169 on the Aussie Kiwi daily chart. So we would be looking for a nice setup here. The problem is, and this is a very consistent pattern, this one right here, see how the market is pushing down with a trend line, pushing the market down into an area of horizontal support resistance? It will almost always bust out and go in the direction of the horizontal level. See? So normally the market will squeeze and go in the direction of the horizontal breakout, not the trend line breakout. Almost always it does what it did here. Not always, it's not 100% foolproof, but that's usually what you get. And that's what we got here. So it didn't give us any sort of kangaroo tail with this big red candle, it just gave us a breakout. So then we see this kangaroo tail, and a lot of people emailed me and they said, ooh, we've got a kangaroo tail. And I say, oh, no, I don't want anything to do with it. And the reason why is because it's not up here on this level. See, this was the brilliant spot for a reversal, and this is no man's land down here. I don't have anything over here where I can hang my hat on to the left, which is unfortunate because it'd be great to take a buy trade down here, but we don't have it. So now the question is, well, what do we do? Well, we can do something really cool. We can actually take the opposite trade, and we can put, and so in a normal kangaroo tail, what we would do is, this is what I would do, is I would put my stop loss below the low. So the low is 1.2050. So I put my stop loss down at 1.2047 or 1.2045. And I put my buy order above the high. The high is 1.2125. So I put my buy order at 1.2130, right? Now the next day I want to see it go. But the next day it never went to 1.2130. It only went to 1.2119. So a lot of people will say, get in on a retracement. Okay, we get in on a retracement on this trade, and guess what? We're going to get stopped out. It's going to go lower than the low here. And so the reason why we use buy stops above the high of the candle is because we like to win. Traders who want to get in cheaply, that's fine. Your reward to risk ratio will go through the roof, but your win rate will also go in the toilet. So it just depends on what you want to do. Do you want to win, or do you want to win big? You can win big, but you're just going to have a lot of losing trades, like this one would be. So I get that question asked a lot. Why don't you take a retracement? You can. There's nothing wrong with that. Just remember, instead of having an 80% win rate, you'll have a 65% win rate. So that's just the way it goes. So, all right. So on this one, this is what I would love to do on this sucker, and we've talked about this. Some of my trading buddies and I have talked about this, where I can put a stop loss right here above the high, which would have been where the buy order was on a normal trade, right? That would have been where I would buy. But instead, that's my stop now. And then I put a sell order right about here. This is another really nice trade, kind of like the Euro CAD. It's setting up nicely for us today. and right about there. And so, if the market trades down here and triggers my sell order, I have my stop loss up here. Now the question becomes, and I know some of you are thinking this right now, that sounds good, Walter, but where do you want to put your target? Where on earth would you put your target? Well, let's take a look back on the chart and see. Where have we seen some really nice support and resistance levels on the daily chart? Let's go way, way back. Way, way back. And what we see is there's one right here. See, look at that. Boom, bam. Like magic, the market has a memory. Where did the market hit here and fall? It fell at 1.2050. And then it hit here again and hit its head. Whoops. It's like magic that the market remembers that area. Now the problem, of course, is that is our actual, where we're getting in at right there. That's our entry price. So we need a target further than that, which is down here. That's around 19. So that's about 150 pips on this sucker, where we have resistance, resistance, support, support, resistance. So this is basically the area of target right here, 1.19. That's where I would be looking for a target right there on this sucker. If it triggers my sell order. My sell order is at 20.45. My stop loss is up here at 20.30. Wait, hold on. 20.45. Sorry, 21.30 is my stop. That's more like it. So I'm selling at 20.45. My stop is at 20.30. Less than 100 pips of risk. And if it triggers that sell order, I'm targeting 1.1905, right? Because we don't want to see it, what happened on the Swissy. We could even put it at 1.1909 or something. Because remember on the Swissy how I missed the second target by 2.6 pips? So that's why I like to, even though I have the zone on 1.19, I'll just put a little bit higher just to make sure if it gets down there and it brushes up against the beer belly, we're good to go. Market orders are fine, Boyke. I just don't like sitting around waiting for it to go. I like sell stops for sell trades and buy stops for buy trades because I don't watch it. I just don't watch it. I've been at the hospital the last week with my wife and my new son. I'm still in, 3 trades at the moment, but I don't have to watch them. I don't even look. I look at the charts like once every day and a half now. And the reason why is because I'm trading the daily charts. I don't have to do, which is great for you guys to have jobs and stuff, If you got a job and you can't trade the 1-minute charts, then it's so cool to be able to look at your charts once a day and manage your trades. It's absolutely brilliant. In fact, I would highly recommend it for those traders who are looking for patience. And, if you over-manage your trades, moving to a higher time frame is just absolutely brilliant. I know everyone wants to trade the 5-minute charts, but if you have a job, it's just so much easier sleep-wise because you can get some sleep if you're trading the daily charts. You can manage your trades. I know lots of friends that have really good jobs and they're not ready to leave their jobs, and these traders will go into the bathroom and just manage their 4-hour chart trades every 4 hours or whatever, which is pretty funny when you think about it. But it's possible to do it. It's possible to be a 4-hour chart trader and still have a 9-to-5 job. It really is possible. So. Yeah, thanks, Boyke. Yeah. Gabriel wants to see the 4-hour on the on this chart. Let's take a look. Are there any other charts that anyone wants to take a look at? See, here's your 4-hour, Gabriel. Really choppy. So basically, what we're saying is we're looking for a breakout here on the 4-hour, or on the daily, we're saying it's a busted kangaroo tail. So that's what you call a broken kangaroo tail. It's a busted kangaroo tail when the market doesn't behave and doesn't go higher here. It actually is breaking down with these big red candles. It's telling us the market's probably going to break out and go lower. Aussie CAD. Oh, Gabriel took the 4-hour engulfing. Let me see. I just want to see. Oh, this one. Yeah, that's not... Hey, there's nothing wrong with that trade right there. That's a nice... The problem is, look, it just went right up against it hit these lows and it couldn't get out. See, at this stage, if I were in this engulfing buy trade, I would just get out because I'd be worried about it going lower. But, that's just me. That's what I would do. Aussie CAD, says Stacy. Let's take a look. Stacy Naidu. Let's see. Aussie CAD, Aussie CAD, Aussie CAD. Oh! Oh, that's a good looking chart. This is a very similar... Okay, see how I was talking about the last chart, the Aussie New Zealand? This is kind of what I'm looking to happen. See how we got this? This isn't really a kangaroo tail, guys, because let me zoom in so you can see. It's not a kangaroo tail because the open and the close of the candle are not in the top third of the candle. If you want the kangaroo tail book, you can email me, walter@fxjake.com, and I'll send you the book. But the main thing here, walter@fxjake.com, there it is on the chart. I'll send you the kangaroo tail book. The idea here, though, is that the close was too low, basically. If it were a higher close, it would have been a nicer looking kangaroo tail, because we had a recent touch right here. So now what happens, and I go, okay, maybe I had my zone here or whatever. I actually have it here. But see how this next candle started printing lower and it didn't move higher? That's a clue that it's going to be a busted kangaroo tail. This is the kind of move I'm looking for on the Aussie Kiwi, where you get these red candles inside of your kangaroo tail. It usually means the market's going to go out and do what it did here. That's a brilliant example of a busted kangaroo tail. It's not a kangaroo tail because, like I said, the close is too low. It would have needed to have a higher close, but it's the idea. This is the sort of pattern that I'm talking about on the other chart. Yeah. If a price is between support and resistance, how important is that where it touched before? I don't understand the question. It's really important to me that I take my trades off that level. So, for example, on the Euro CAD, it's really important if I take a trade on the Euro CAD, it's really important to me that it gets to, remember how I said I want to go to 32.95? That's why I said it needs to wick into 32.95, because I want to see it get where these other candles reverse. See, this candle right here has a high of 32.99. This candle here has a high of 33.04. This candle here has a high of 33.01. This candle here has a high of 32.97. And this candle here has a high of 33 even. So I need this candle to go up where the other candles went to and fell. It needs to do the same thing here. There's no guarantees that's going to happen, but if it gets to 32.95 and then prints a bearish candle with a red candle, I'm willing to say that that was the touch, and that's where I'm going to hang my hat on this trade here, because we've seen reversals here, we saw one here, we saw a touch here, and even here you say, well, it didn't reverse there, Walter. You're right, but look at what it did. This candle came up and it printed a long wick because it couldn't close above that. This candle came up and it printed a bearish belt because it couldn't close above that zone. So 2 days in a row, on April 12th and on April 15th, it couldn't close above. That is a sign that, guess what? It's a zone. It can't get above it. Now, it did break above and go eventually, but that is still just as strong to me as a signal as these touches over here. It's just as important. It's just as important, even though it went higher. It is very, very important to me that it took 2 days for it to get beyond this level. That's absolutely critical. That justifies me drawing a zone here. And that's where that little jig on the line chart came from. All right, guys, I really got to go. I'm sorry. I would love to stay and chat, but I know we'll see you next week. Just the 4-hour, Gabriel. If I take a 4-hour, I manage on the 4-hour. Thanks a lot, Boyke. Thanks, Gabriel. Canaparan, you can email me if you have a question. Walter@fxjake.com. All right, thanks, guys. We'll see you next week. We're going to be trading the Asian drift next week, so I hope to see you there. Have a good day, Pan. Thanks a lot. I'm going to go get some sleep. And those of you that have kids know what I mean, especially when they're like 2 days old. You need to get your sleep. But I will still be watching, especially tomorrow. Tomorrow's going to be a fun day. Thanks, guys. Take care. Thanks, Rita. Bye, everyone. I really appreciate it. Take care, guys. Have a wonderful trading week. Thanks a lot.